Good morning and welcome to MarketCast 22. The summer has genuinely arrived. I broadcast to you live this morning from a very sunny Bournemouth. The AF Oliver offices here are illuminated with the joy of a little bit of warmth and no rain, thank goodness, and an election on the horizon. Now, you're going to have to bear with me this morning, and if I disappear from time to time behind this screen, we've had a little bit of a technology failure with my jump forward on the slides. I think they're a little bit like all of us really, as we've run up into this election, the batteries have got a little bit low. But the content still applies, and the first thing I need to do, is to mention the shirt, of course. It's giraffes, and if you're wondering about why giraffes, well, one of my LinkedIn correspondents, Jade Boyles-White, had it absolutely dead right in an exchange yesterday evening. These politicians have got some neck, haven't they? And quite honestly, the whole giraffe thing was the best way I could represent that. Mea culpa here, or not mea culpa, it's not my fault, but a little bit of admission, full disclosure. I've made two big wrong calls. I've had a really good run over the last year at a time when the market looked as it was going to go sliding off the edge of a cliff. We stuck to our guns, didn't we? We said no crash, and no crash was the outcome. But two things I got hopelessly wrong. Number one was Rishi Sunak completely wrong-footed me and wrong-footed everybody else, it seems. Well, apart from those in his immediate coterie who, after the meeting, nipped straight down to the betting shop. Why wouldn't you do that and have a bet on a July election? Nobody rang me and told me, though. So I'd been saying for months, hadn't I? It was going to be October, November, absolutely no question. And well, Rishi stepped up and booked July the 4th. So we've got that a couple of weeks away. And then there is a second wrong call. I was absolutely certain that we'd see a slight retrench in the nationwide index in May. And well, it actually popped up in May, which caught me by surprise and blasted a little bit of a hole in my Diplodocus theory, but it didn't completely floor it. I'm going to come back to that, and with a little bit of an adjustment. I brought a spanner and a set of feeler gauges and a can of WD-40, and we're going to get the Diplodocus back on the road. But in the meantime, I always like to set myself this challenge. Matt, can you describe the market, the current property market, in 3 words? It's really tricky right now. There's lots of stuff going on. Here are my 3 words. It's stable. Against all the odds, it's stable. Rightmove recently have been out and done a huge survey, 14,000 people that they covered in their survey, buyers and sellers, and said, is the election being on the horizon going to affect your plans? No, we are going to move ahead. But there is a definite element of waiting going on there in there. Sellers are watching and waiting to delay that decision just by a couple of weeks in case there's going to be an advantageous move in stamp duty or something similar. Well, it's hardly surprising. But look at all the numbers and the market sits there very stable. And I'm sure, look, it's from our own research, we know that this MarketCast audience is about 97, 98% house building industry. So I feel I am talking to fellow professionals here, and you will have felt that resurgence as we came through spring, and you'd have felt that increased activity on site, and you'd have felt higher levels, bless you by the way, John, and you'd have felt higher levels of activity on site and better reservation rates. But you've felt that, haven't you? There's just a little bit of a slight intake of breath, just in case things change as we get further down the road. And why needy? Well, I'll tell you, because the market conditions that we've had over the last 18 months have seen that driver in the market shift from the wants-based, which prior to the when we had the huge boom in 2021 and into early 2022, into a needs base. So over the past 18 months, the real movers, the buyers, have been those who need to move rather than just want to move on a whim. That needs-based market is extreme at the moment, and the pressure under the lid is absolutely building, and there is a really big opportunity for us there. And here's the thing, the surge word has reappeared. Who would have believed that just 6 months ago? I'll come back to that in a moment or two. First of all, let's get back to Diplo and the Diplodocus theory. This is where I was last month, and I am the first person to stick my hand up and say I got this wrong. This was my forecast for the nationwide index for May, so I'd sort of been just about bang on up until the end of April, and then I felt that in May we were going to just move slightly into negative. These are very small numbers, by the way. That's 0.5%. It was minus 0.5% as we slid down Diplo's neck. Well, what actually happened, as I'm sure you know, May sort of did that. And we actually had a over 1% increase in the nationwide index in May. And so Diplo sort of got a bit of a pain in the back of the top of his neck. Well, I'm sort of thinking about this, and rather than move my dinosaur straight off to one side, I am still convinced that the principle is good. So I've nudged him just to there. And as you can see, with a little bit of nudge, he still fits. He still fits. And the principle for me, I'm still absolutely convinced. All joking aside, what is really important for you as you watch this market cast is how this market is going to be through summer and then into the back end of the year. Quarter 4 this year, I think, is going to be absolutely critical. And that quarter 4 is where I see the dinosaur tail. And I think that presents a great opportunity for us. Okay, let's get into the meat of this. Let's have a quick look at how the media are seeing things in the market right now. A couple of stories. I always like to drag a story out of the Guardian. I normally a little bit of Guardian and a little bit of Daily Mail, because I think that gives us a really nice balance, doesn't it, in terms of editorial response to what often is the same stimulus on both sides. The election is leading the editorial way, as you'd expect here. And here's the Guardian. I think this was yesterday or the day before yesterday. UK house prices remain near record with little sign of election impact. What they've done is they've picked up the Rightmove press release. The new Rightmove numbers, I'm sure you know, came out on Monday, and along with the press release, and the lazy journos, sorry, don't quote me on that, have picked up the press release and they've said, there it is, the election really hasn't caused that much movement. As you well know, Rightmove is asking prices. And this is what surprises me, how the journalists generally, the property journalists generally, never quite get the difference between prices, sold prices and asking prices. But they take this and then they offer this up as fact and reality. Well, of course, what we know is these are only properties newly coming to the market as far as the Rightmove survey is concerned. And you can see there's been just this tiny slip. I'll show you the Rightmove numbers in a minute, but essentially it's 0%. It's 0% for the May into June numbers. I think it came down by 21 quid on a £300,000 average price. So virtually no movement at all. And here's the Independent as a little bit of a balance. I couldn't find anything in the Mail, well, other than the price for new dentures and getting stonewall cladding. But so here you can see here, will the general election impede house prices? And they're essentially saying the same thing. Probably not. But we'll look at that obviously in a bit more detail because it's going to be so important to us over the next few months. The surge word has come back. Who would have thought? This is a story in the Evening Standard. I think this was Tuesday, actually. Housing market primed to surge after the election. This is Diplo's tail that they're talking about right here. But primed to surge after the election as interest rates come into view. We'll touch on interest rates. It's today, of course, the MPC. So we'll touch on that in a moment or two. And I'll give you my view as ever. Here's the Express here. UK interest rates fall, but warning over house prices as a 4-year prediction is made. Surging house prices, 4-year prediction is made. Really? Okay, so we've got a bit of surge, but if you actually go back to the trade press, the estate agent today interpretation of the Rightmove numbers, UK asking prices hit by summer slump. Who could have written it? This is a £21 reduction on an average price of £375,000. Well, if that is a summer slump, bring it on. Let's go. Let's have a look at some of the crucial data. I like to actually put up the property mark numbers. It's interesting. Normally they have 3 KPIs on their opening page. And I've complained on social media in the past of 1 or 2 commentators that just cherry pick the stats out of those 3. There are not 2 there because I've removed 1. This is just what the Property Mark report for April, which only came out last week, looked like. Importantly for us and this audience this morning, 14% increase in the number of market appraisals undertaken during April. So we've seen that, more people coming to market. And here we go, a 16% increase in the number of potential buyers registered during April. As I'm sure you know, the inflation numbers came out yesterday and the headline number was good news, wasn't it? This inflation dropped down to 2%. This is the government target. Whoopee! Surely interest rates are going to follow, but no, because we've worried, haven't we? Over the past year, we've talked about CPI and CPIH with homeowner costing, and we've talked about that sticky core inflation. Well, heavens, the banks and the institutions have found another little tinker in the inflation numbers. And guess what? That is services inflation. This is one that hasn't reared its ugly head before, and I know that because I've been back to check. So although we've seen overall inflation come down to 2%, services inflation has only dropped from 6% down to 5.9%, even though I believe it's being quoted in some papers this morning at 5.5%. If you go on to the ONS website, it says 5.9. Hey, let's not worry over the odd point something of a percentage. What really does matter is that all of the institutions and the Treasury are saying, oh, do you know what? We were about to weigh in with a monster interest rate cut and oh, look at that, services inflation running at 5.5. So although the MPC are meeting later today, I think it's noon, I think we get that decision. I think it is highly unlikely that we will see any interest rate cut today. I'm very hopeful about August, 25 point cut in August, but today, you know, I'll be honest, I'm just following what economists have been saying both yesterday and today after these inflation numbers came out. It's a shame, and I genuinely felt that we were going to see that cut today. It's looking very, very unlikely. Here's where we are, look. So we've got CPI now, headline inflation at 2. The CPIH, so this is the one that is most relevant to our prospective buyers, has dropped down to 2.8%. So that is coming down to, and then the owner-occupier costs, the housing costs. So that is including in there things like mortgage, things like repairs and renewals and decoration and so on. And that is sat still up there, sticky at 6.7%. And that does include services, by the way, things like home insurance and those sort of numbers all sitting there. Altogether, we can look at this all day long, and the whole beauty of MarketCast is we don't go analytical. What we want to know is, what does it mean to us? You know, it's the classic so what principle that we apply, and what that means to us is almost certainly no interest rate cut today, and that means almost certainly that mortgage rates are going to stay roughly where they are. No question that over the longer term that the likelihood is that we're going to see them move downwards, and certainly you can get mortgages at the moment at under 5%. So here we go. I'll give you here's how interest rates have been running. This is a great chart, isn't it, for trends and for getting a sense and getting under the bonnet in terms of how prospective buyers are thinking, because there is one thing about, can I afford? So here's where mortgage rates have gone from where we are over here to where we are here. And you can see this is a pretty steady old journey now, whether we are talking about 2-year fixed rates at different loans to value, or whether we're talking about a 75% loan to value at different fixed terms. You can see that generally we are steadying out here. But one of the things that really affects buyer sentiment is the FOMO effect. And that's very important. And if you are thinking about this and you're sitting down with your IFAs anytime soon, I'm thinking of buying. I'm about to sign up for a mortgage. The least term I'm going to do is a 2-year fix. I might even go 3 or 4. But what if I sign up for that mortgage today and then next week they drop that interest rate by 25 points or even 50 points and I miss out on a really good mortgage rate, which it comes down then just after I've signed a 2-year fix. There's a great opportunity there, isn't there, to introduce a financial incentive that fixes somebody's mortgage so there is no chance of them missing out on the likely cut in interest rates over the next 12 months. I would be amazed if we do not see interest rates at least 1 whole percentage point lower in 12 months' time from where they are today. That one might come back to bite me, but I'm convinced that that's where we're going to be. Where does this leave consumer confidence? You know this is a big driver. You know why this chart is so important to us. This is the thing that enables us to future gaze. Quick look at this chart and a very quick run through what they all mean. The red line on this chart is the overall index score, and it continues to creep ever upwards towards neutral. Don't forget that any line that is below this black line means that people's confidence, that over 2,000 people that they question every month in this survey, the majority think things are going to get better rather than worse over the next 12 months. This is where we were. This is where we are. There is an inexorable rise. The trend is positive, there is no question, but we are still in negative. There was a great Zoopla fact that they put in their report earlier this month, in this month's report, where they talked about the fact that there was 390,000 homes currently in the sales pipeline, an extraordinary fact. But guess what? 1/3 of all homes for sale in the UK right now were also for sale in 2023 and came through it unsold. So that's 1/3 of all homes on the market last year didn't get sold. This is still a price-sensitive market, and anyone that doesn't see that is going to see their commercial edge blunted. There's no question about that. So we are still in negative with the overall index score, but it's getting better. The green line, is the next 12 months a good time or a bad time to make a major purchase, kitchen, house, car, etc.? That again is climbing, but more slowly. This is our nervous market. This is our hesitant market, isn't it? That thinking, oh, is this a good time? Shall I just wait and see how things outturn? The blue line here, so how is the UK economy going to fare over the next 12 months? Is it going to get better or worse? Again, still deeply in negative, but look where it was. After the Truss Kwarteng a mini budget, look where it was, down here. And look where it is, here. So there is a massive sea change in people's attitude to where the economy is likely to be headed, but still in negative. And then finally, the last question, your own personal finances, are they going to get better or worse in the next 12 months? This is where we were after the mini budget. And look at this, and look at the May numbers. We've got the June numbers coming out literally in a few days' time. I think it might even be the back end of this week. And I'll put that out on LinkedIn so you can see how that's going, because at the moment we could really do with keeping our fingers on the pulse of how confidence is in the UK economy, because it's going to drive all sorts of commercial decisions for you on how aggressive you want to get with pricing and clearing down stock. So it's into positive and it's climbing on positive. This data was collected, by the way, before the election result date was announced. So that's important. Normally these key dates kick off with Rishi waving and saying, here comes the October-November election. Well, of course, he completely did me up like a kipper. There is a school of thought, you know, that he was in a cabinet meeting and they were talking about the election. Somebody said, yeah, October, November. Someone apparently around the cabinet table said, have you been watching Matt Fleming's MarketCast? Because it would be really good if we stuffed in one, wouldn't it? And go July, just to catch him out. Well, anyway, he's done it. July 4. Thanks, Rishi. That's great. Credibility, zero. Inflation figures, I know you know, came out yesterday. The next ones now we are going to see on July 17. That's an important number. Keep an eye out for that services inflation, because where that number is, if that services inflation can come down under 5%, and don't forget at the moment that wages inflation is still up between 5 and 6%. So effectively, prices for the consumer generally are coming down by over 3%. If you subtract the general inflation from wages inflation, that's where you end up. These numbers are going to be very important because obviously we've got the MPC meeting on August the 1st. So it's today at noon. Expect no change. And then we've got August the 1st. There certainly won't be an increase today, he says very confidently, hiding behind the monitor. So what's going to happen with the election then? Well, we've now seen all the manifestos, and we've got Keir here who's come out and said he's going to introduce freedom to buy. What is freedom to buy? Well, it's just deposit unlock by another name. It's a mortgage guarantee scheme. Well done, Rishi. Great new thinking there. But at least it means that that scheme is going to carry on, and I think he intends to enhance it, and I also think he intends to make it a permanent thing, erring towards helping the first-time buyers. He's also talked about stamp duty relief as well for first-time buyers. As far as the Libs are concerned, Mr. Davey has just been too busy falling off paddle boards, playing paintball, you name it, whack-a-mole, whatever he is doing for the next photo opportunity, and actually has paid no attention whatsoever to housing. And I'm sure you've picked up in the press that the Liberal manifesto, the Lib Dems manifesto, talks about the poor quality of new homes, their high energy usage, their pollution potential, and all the other things that we have done so much to counter. And when you think that a new home uses that much energy compared with your average second-hand home, it's an outrage. The one thing he has said, he is going to ensure, his party is going to ensure if they're in government, that they deliver 380,000 new houses a year. Best of luck with that one, Ed. I would go back to paddleboarding if I were you. And so here's Rishi here. No stamp duty up to 425k, good one. And then he comes in with the monster. It's the bazooka, isn't it? It's a boom. Help to Buy. Help to Buy is coming back. Well, it's not, is it? Because they're not going to get in. But it would have done if you'd voted for him. And now we've got a fourth player who's going to reform, obviously. Now, Mr. Farage has stepped into the breach. And I've got to say, I've read through. Look, I am staying apolitical for this discussion. I don't want to get involved with pinning my colours to any mast. But you've got to say, stamp duty cuts, yeah, we know all about that one. But I was quite impressed with the fast-track planning for brownfield sites. Heaven, we certainly need that. And a complete review and overhaul of the S106 system. Definitely needs that. I think they all talk about planning. Whether they actually put their words into deeds, who knows? So what effect is this going to have? And I know we're starting to run short on time, but it was an election special. It was always going to be tricky to try and squeeze this into 30 minutes. Really interesting charts. I did these, by the way, ages ago. I've got to say, though, Nationwide's charts, not only do they do them with a team of 300 as against me on my own, but they're also a bit better than mine. Just a little bit better than mine. Well, some people say they're not, but, you know, I'm just a modest sort of chap. So here's the election in the middle where these lines point. That is 6 months before, that's 6 months after, and it's all balanced and zeroed at the point of election, okay? Over on this one is prices, over on this one are volumes. That's me simplifying it for you as far as I possibly can. Have a look. I could go into these really deeply and talk about what sort of elections they were and all the silly nonsense we had when it was Boris and it was Liz Truss and it was Theresa May and so on. Really, though, the important point is, quite honestly, there is virtually no effect in terms of price. What affects the price is what happens afterwards. So the actual process of having the election has virtually no effect, in my view, whatsoever on price. These trends here, down these years, are trends that are created by other things completely outside of that election process. If you look at so that's prices. If you look at the chart on volumes, slightly different. And actually, I think my chart, funnily enough, on this is better. But, you know, just saying. But if you look at volumes, there is no question that volumes do tend to flatten out just before an election. The notice that we had in this one here was so small, so it was called as such a shock and a surprise that there was almost no chance for it to have an effect on volumes. But an effect on volumes it definitely has, particularly at the higher end of the market, by the way. That's where we've seen a real pause. So that's where you know, when I talked about the watching element in the market, where people have taken one step back, said, hang on a minute, let's just see what happens before we put our house on the market, before we do what we need to do. So that definitely has an effect, you know, a fairly small effect. My suggestion to you is you press ahead regardless. Quite honestly, let's worry about the other things that are going to affect the market, interest rates in particular. So overall costs, so inflation and interest rates. I'm discounting its effect in terms of the markets. Right, a really quick a gallop through the key data, because most of this stuff you know already. What's much more important is what's going to happen next. My favourite chart, as you know, this is the property market stuff. It's a shame it's a little bit out of date every time. But these are the April numbers. They come from that same property market report I showed you just now. Don't forget, the grey are deals done below asking price. The blue, deals done above asking price. The orange, deals done at asking price. The reason I love that chart, and it starts back here in January 2022, the height of the unexpected boom that we had, you know, with almost half of all the deals were being done above asking price. And then look as the grey expanded. As we came through the back end of 2022, the interest rate rises were taking effect, and we really had this low point, didn't we, as we came through the back end of 2022 and into 2023. And since then, there is the unmistakable trend of the market changing and improving. And if I take away all the colours and just show you the deals that are done at asking or better, and you can see there beautifully what I'm trying to say. It's still a price sensitive market. Volumes are still low. Again, this is another chart I don't need to dwell on, but these are the latest volumes here. 61,500 mortgage approvals in the April numbers, way below where it should be, but it means that we're almost certainly going to see in excess of 1 million transactions this year. These were the right move numbers I was referring to just now. They came out on Monday. 21 quid, the average asking price of properties coming to the market, May into June, no movement. Here though, prices remain just fractionally over the year, 0.6% higher, but sales agreed 6% up over the year from where they were. And now that is a genuine number. So these are deals that are done. What is quite extraordinary, by the way, is this incredible stretching out of time in between a sale agreed and legal completion. People now are talking about 4, 5 and 6 months. Just think about that in marketing terms. You know, we should now be thinking about buy now for Christmas, which is amazing but true. Halifax telling the same sort of story. Here's Nationwide, the rascals, with their 1.3% jump in average price last year that completely wrong-footed me. Them and Rishi, I think they're in cahoots getting together to try and prove my MarketCast wrong. Not nearly as wrong as some of the others that I could take you through. This is the important one, isn't it? The 3-month and 3 months Nationwide numbers that shows you beautifully the trend. Here's Diplo's neck. Mark my words, Diplo will be making a comeback. If we look at the Zoopla numbers, it's extraordinary, really, how all of the 4 main indices now are absolutely lining up. Here's their average annual number, 0.1%. But interestingly, just before I leave this slide here, the value of homes for sale, so they've taken all of the homes on the market, added it all up against this time last year, 25% higher. So that's obviously, bearing in mind that the inflation rate is virtually flat, shows you the change in mix. And quickly on the Zoopla numbers as we run up to the end, buyer demand just slightly up, sales agreed 13% up over this time last year, new supply 14% up. It's starting to balance, isn't it? Stock of homes 20% higher than this time last year. That's a good thing, by the way. It brings more fluidity into the market. The RICS, got to quickly show you this because the RICS are very much on the Diplodocus run. This is where they see, these were newly agreed sales in the past month. Here's the drop. This, for me, this is proof positive that we are just on that gentle slide down the back of Diplo's neck. But when we look forward here, new vendor instructions, gently up. This is exactly what I would expect to see. And when you look at what they say is going to happen with prices and volumes, you can see the 3-month measure on where they think, the surveyors this is, by the way, the people that set prices, they see that the balance of agents feel that they're going to fall in 3 months, but a very strong balance of agents believe over 12 months that they are going to be higher. And if you look at volumes, you can see here, this has just moved into negative over the next 3 months. It's Diplo all over again. And you can see then over the 12 months, here's that Diplo's tail coming up at the end. Nearly done. And I know we're going to run a minute or two over, but stay with me on this. So values and volumes then, this was a year ago where I saw my market factor matrix, and this is now where it has actually come back to. And you can see that that employment market, which continues to deteriorate, even though we've got between 5 and 6% wage growth inflation, lifestyle changes now are right back out here. Watch out for stamp duty changes. That could actually move back centre screen depending on who wins the election on July the 4th. Consumer confidence continues to improve and climbs up to centre screen here. But up here in this top right-hand quadrant, this is where you can really affect the way that the market is working for you. Remember the FOMO issue. So don't let your prospects and potential buyers be worrying that they're going to miss out on interest rate cuts that are sure to happen. Just a couple of slides to go now. So here's where we are then. This was the wrecking ball of May numbers. I'm staying with the whole Diplo thing, and I think the June nationwide numbers will show a tiny little bit of negative, and I think then we'll see that come down into summer, and then I think we'll see the dinosaur's tail. I am staying, unlike other major institutions that have changed their forecast 3 times this year already, I am staying with the forecast I first showed to you last November. So in terms of overall result, and if I stick Diplo, why wouldn't we? Why wouldn't we stick him on there? I should have had a giraffe on there really, shouldn't I? But you can see that, okay, I've delayed him by a month, but he still works. So as a summary of all of that I've just given you then, market in 3 words, it's stable, it's steady. You're going to have to work hard for it. You know, so every sale is a difficult sale to get through, but that they are watching. People are saying, okay, what's going to happen? Might just wait a couple of weeks and just see what happens. Almost certainly going to be a Labour government, isn't it? And we now have the manifesto. So even that has been undermined a bit, but it's watching. And don't forget, it's needy. So the pressure is building on the needs-based side of the UK property market, and you need to be thinking about taking advantage of that position. So Diplo's moved backwards, but I still believe it's the right shape. Election, limited effect, almost no effect on values as far as I'm concerned. Much more the wider macro background issues that actually affect how the market moves. And, you know, and a very, very slight pause on volumes, but no real overall effect. I still believe volumes are going to end up between 1 and 1.1 million. Very unlikely that we'll see a rate cut today. Every chance we'll see a rate cut in August, provided those July inflation numbers, particularly the service sector inflation numbers, come down a little bit. Volumes they continue to improve. There is the potential for a surge. I'm not buying the surge thing yet, but there is the potential for a surge. I'm sorry I've kept you slightly late again this morning, but it was an election special. We had lots to squeeze in. And of course, I had to go around the back of the screen button pressing as well. I hope it wasn't too much of a distraction. Big thanks to Joan, big thanks to James for the team this morning. I hope you've enjoyed it. We'll be back in July. No MarketCast in August. We're going to take the summer off, but it will be really interesting because next time I see you, we'll almost certainly have a new government and a new Prime Minister and a whole new raft of housing policies to discuss and determine what that means for the market. Have a great day. Enjoy the sunshine. I'll see you in July.